Stocks trade ranged ahead of the key inflation number in the US, financials, auto and IT gain, while realty and metals drag. Dalmia Bharat slips on likely profit booking a day after it inks a deal to buy the cement assets of JP Associates. Some concerns on clearances and closure of the deal also weigh. Tata Motors is looking to divest part of its stake in subsidiary Tata Technologies via an IPO. The stock perks up on the monetization move. Colgate-Palmolive India says it is looking to expand into personal care and is open to inorganic opportunities in the segment, even as it strives for category-leading growth in oral care. Hello and welcome to Halftime Report. I'm Sonal Bhutra and with me is Mangalam Malu. For the markets today, we are in the green. Not a bad day, so to say. Up around 90 points on the Nifty at that 18,586 mark. And we also have the other indices doing really well in trade right now. So Bank Nifty is the one which is up around 0.6%. But of course, important comments coming in from the Defence Minister. So let's cut across.
अरुणाचल प्रदेश के तवांग सेक्टर में हमारी सीमा पर 9 दिसंबर 2022 को हुई एक घटना के बारे में अवगत कराना चाहूंगा।
प्लीज स्टेटमेंट के बीच में नहीं बोलते। नो प्लीज
में छुट्टी भी थी। 9 दिसंबर 2022 को पीएलए ट्रुप्स ने तवांग सेक्टर के यांगसे एरिया में लाइन ऑफ एक्चुअल कंट्रोल पर अतिक्रमण कर स्टेटस को एक तरफा बदलने का प्रयास किया। चाइना के इस प्रयास का हमारी सेना ने दृढ़ता के साथ सामना किया है अध्यक्ष महोदय, और इस फेस ऑफ में हाथापाई भी हुई है। भारतीय सेना ने बहादुरी से पीएलए को हमारी टेरिटरी में अतिक्रमण करने से रोका और उन्हें उनकी पोस्ट पर वापस जाने के लिए मजबूर कर दिया अध्यक्ष महोदय। इस झड़प में दोनों ओर के कुछ सैनिकों को चोटें भी आई हैं और मैं इस सदन को अवगत कराना चाहता हूं कि हमारे किसी भी सैनिक की न तो मृत्यु हुई है और न ही कोई गंभीर रूप से घायल हुआ है। इंडियन मिलिट्री कमांडर्स के टाइमली इंटरवेंशन के कारण पीएलए सोल्जर्स अपनी लोकेशंस पर वापस चले गए अध्यक्ष महोदय, और इस घटना के पश्चात एरिया के लोकल कमांडर ने 11 दिसंबर 2022 को अपने चाइनीज काउंटर पार्ट के साथ स्थापित व्यवस्था के तहत एक फ्लैग मीटिंग की और इस घटना पर चर्चा की। चीनी पक्ष को इस तरह के एक्शंस के लिए मना किया गया और सीमा पर शांति बनाए रखने के लिए कहा गया। इस मुद्दे को चीनी पक्ष के साथ कूटनीतिक स्तर पर भी उठाया गया है। अध्यक्ष महोदय, मैं इस सदन को आश्वस्त करना चाहता हूं कि हमारी सेनाएं हमारी भौमिक अखंडता को सुरक्षित रखने के लिए पूरी तरह से प्रतिबद्ध हैं और इसके खिलाफ किसी भी प्रयास को रोकने के लिए सदैव तत्पर है हमारी भारत की सेना। और मुझे विश्वास है कि यह सदन हमारी सेनाओं की वीरता और साहस को एक स्वर से समर्थन देगा। और अध्यक्ष महोदय, मैं पूरी तरह से आश्वस्त हूं कि यह संसद बिना किसी संशय के भारत की सेना की क्षमता, शौर्य, पराक्रम व प्रतिबद्धता का भी अभिनंदन करेगा। धन्यवाद अध्यक्ष महोदय।
कोई माननीय आप वरिष्ठ सदस्य हैं, सदन नियमों प्रक्रियाओं से चलता है और नियम प्रक्रिया के अंदर कोई भी स्पष्टीकरण का सदन में लोकसभा में नियम प्रक्रिया नहीं है। आपका कोई रिकॉर्ड में नहीं जा रहा। आप एक चीज रिकॉर्ड में लो। एक मिनट मेरी बात सुनो। बालूजी।
All right, so that was the Defence Minister Rajnath Singh apprising the Parliament of the standoff that took place on December 9 between some Indian soldiers and members of the PLA, and at the same time he said that there was timely retaliation by the Indian troops, and that led to the members of the PLA actually return to the base, and as a result of which no Indian soldier has lost their life or has been seriously injured, and Indian troops have stopped the Chinese troops from entering our territory on December 9th. So that's the update as it is. Also, just a look at the markets. They're doing extremely well as we speak. So we'll keep an eye out on, the movements out here as well, because usually geopolitical tensions or such things do tend to have a bearing on the market. The market seems to be unperturbed by this, as the defense minister has said that, our troops have actually ensured that there was no problems at the LAC with regards to transcation. Let's move on. Let's also talk about PSP projects. The stock has been surging this year, up 45%. The company has won a lot of orders for civil construction projects in Gujarat from Neela Spaces. And the orders have been worth over 120 odd crores. To talk about this and other parts of the business, we do have with us Mr. P.S. Patel, who's the CMD and CEO at the company. Thanks a lot, Mr. Patel, for joining in. Before we talk about the orders, yesterday there was a stake sale by the promoters. It was recorded in the exchanges. Can you tell us why was it that the promoters sold their stake, and what is their plan going ahead?
Yes, sir, there is no point of selling the stake from the promoter, but actually we were in search of large investors, and that was the reason. And the liquidity in the market about our shares is a little bit less. So just to create a liquidity, we sold that stake to a good long-term investor.
Any further stake sale by the promoters?
Pardon me?
Will there be any further stake sale by the promoters? It was a 2.7% stake sale yesterday. Any more plans there?
No further planning. Just it was one large investor where we thought we can give it because just to create liquidity in the market.
Okay. All right. So this is about the promoter stake sale. Let's talk. What do you plan to do with those funds, by the way? It is just to it was just to sell this to a new investor, or will you be using those funds anywhere in any other assets, so to say?
No. As of now, there is no plan to utilize that money where and how. But it was just to give it to a right investor at the present stage.
All right, take that point. And let's talk about the order book then. You won about 121 crore worth orders and some others as well. What exactly is your current order book status, and what is the kind of inflow that you expect going forward in the second half of this year?
At the start of this year, 23, we envisaged our order book inflow to be 2,500 crore, which we have already reached to 1948 crore till now. And we still expect that further 500 to 1,000 crore because there are few large projects we are going to bid on. So we are expecting better inflow of order this year.
So expecting better inflow. For the two orders that you won yesterday, what is the execution timeline looking like? And do they come at better margins for you?
Yeah, as far as the margins are concerned, we usually quote based on the margins what the company has been doing since now. And both orders, one is for the interior of airport project from Adani Airport, and the second project is from an industrial company, Deepak Nitrite.
Right. Back in the day, over 80%, roughly 85%, if you can correct me if I'm mistaken, of your order book was in Gujarat itself. Your revenues were concentrated in Gujarat. We recently got the results of Gujarat elections as well. So, assuming that political stability out there would be good for your business?
Yeah, of course, any political stability in any of the state is always good for the economy. So, as far as our order book is concerned, this year actually our whole order book is from Gujarat, and in the past year our order book was from almost 50% from UP. Otherwise, we are still hopeful that this order book, which we are expecting to add on, that will also come from.
So are you looking at expanding your order book from Gujarat to other states? Do you have something in Maharashtra? And what is the exposure to private companies versus government?
Usually our private to government is 60-40. Sometimes government is 60, sometimes private is 60. But it will remain in the range of 50-50. And that depends on, again, the opportunities. What type of opportunity, what type of competition it is. But otherwise, there is no as such criteria to maintain that how much we should keep on private and how much we should keep on government.
Expansion to other states is concerned. Did you have any projects in Maharashtra as well?
Yeah, we have already one project which is slow moving project of Bhiwandi and Pandharpur. That's there in the court. And the other project which we have just bidded as a pre-qualification is in Navi Mumbai. That is on Gem and Jewelry.
All right. And what about, you spoke about gem and jewelry. Surat Diamond Bourse, has that completed? Have you got all the money?
Yeah, the project has been completed and we have already got the virtual completion. The people are in the process of making furniture for their own offices. And our final bill is under scrutiny and probably we should be able to get all the money back by December end.
And the SRA Chandivali orders that you got earlier, for which all approvals were received, how is that progressing?
SRA Chandivali is a very old story, and I think we regretted that order. We didn't accept that order.
Okay. And you're talking about strong order book, 500 to 1,000 crore rupees in terms of orders coming in, which is the visibility. What does it do to your debt since you will be taking up more projects? What is the current debt and what will peak debt look like by end of this year and FY24 as well?
See, as far as PSP is concerned, we are almost zero debt company. We have a long-term debt of not more than 10 to 12 crore, which is based on the machinery part. And short-term debt is also 80 crore, which is sufficient for the company. We have a very still an open CC limit from the bank also. So as of now, there won't be any requirement of funds. We are able to maintain our working capital from our net accruals.
All right. And final question then, you said that, the promoters sold because a high net worth individual investor was looking to invest in the company. We also know that, the buyer was Himalaya Finance and Investment Company, which is promoted by Ashish Kacholia. Just wanted to know if you had a word with him on whether he intends to buy more stake in the company or this is where he intends to hold his holdings in your company.
As such, there is no such commitment or we had a talk regarding that. It was the first deal which we have made with him and that was this figure which we have concluded yesterday.
Okay. All right, Mr. Patel, it was a pleasure speaking with you. Thank you so much for joining us and giving us an update on that promoter stake sale and the order outlook as well. The stock is flat today, but was buzzing in trade yesterday on the back of order wins that we have been talking about. With that, we'll slip into a break. On the other side, we'll focus on Colgate in our special segment Value Add and a buzzing stock Polycab as well. Stay tuned.
Welcome back. You're watching us here on Halftime Report. Important news coming in from Tata Motors. They've increased their prices and they will increase the prices of their commercial vehicles from January 2023. So be ready to pay a little more in case you're looking to buy a Tata Motor commercial vehicle. They will be different for different models, but across the board, they haven't quantified the kind of price increases. The stock has been doing well already on account of the divestment news or the IPO news coming in for Tata Tele itself. But let's talk about our special segment Value Add today, where we're focusing on oral care. Colgate, it held its first analyst meet ever since the takeover of the company as takeover of Prabha Narasimhan as the company's MD and CEO. And she's spelled out the roadmap for the group. The first one, of course, is the per capita consumption that needs to be increased for the company. In India, the per capita consumption of toothpaste is 1 times as against Philippines, which is 1.8, and other comparable country is Brazil, which is 3.1. So as a result of which, the more people brush their teeth, the better sales they will do. And in that, the low-hanging fruit is rural India. 0.6x is the per capita consumption as compared to in urban India, which is 1.7. And an interesting nugget was that 55% of rural Indian consumers do not brush their teeth even once a day. So that is something that they believe could be a bit of a re-rating for them in terms of increased consumption. The second thing is that urban India, toothpaste replacement is 6 months and rural India, it is 15 months. The company recommended replacement is about 3 months. So if that happens as well, that could grow sales for them. So for that, they've laid out a 4-point strategy. The first one, lead toothpaste category growth. Of course, they are 3x the next competitor. So for them, it will be an important one to do that. Second, through innovation, etc., they would look at premiumization because around 65% of their sales happen at the average selling price for the category itself. The third one, lead category growth in toothbrush as well as other devices, electronic devices. And the fourth one is to build personal care. So that is something that they'll be looking at. In terms of actionables, they have 2 of them or 3 of them which have been pulled out. The first one, eP2P platform, Dentist First, will come by in Jan 2023. They've entered the kids toothpaste category, so that should do well for them as well. And they've digitized their sales force, so that would help them in their operations too. So to summarize, they've said 4 important things. The first one is that they expect to drive category volume growth. The second one, there would be a viable growth in their personal care business. And the third most important thing is that they're also not averse to looking at inorganic opportunities in personal care. So if that was to happen, that may provide another jumpstart for growth for the company. So that's about Colgate. The stock mildly flat. Maybe the street wants to see the company go ahead and walk the talk, or maybe brush the teeth, as they say.
Okay, all right. Thank you for that. That's on Colgate. But the other stock in the broader markets that's doing well is Polycab, buzzing in trade this week. Today also, it's up around 4%. Vaishta is telling us what's driving the stock move today, Vaishta.
Well, Sonal, Polycab India has had a good festive season, and the company has said that there's been good demand in the wires and cables segment during October to November, which was driven by both the B2B as well as the B2C segments. There are easing inflationary pressures, and there's a wider reach which is going to help the company in the medium to long term. The company is a leading manufacturer of wires and cables with 22% market share in the organized segment, and the company is well placed to capture the long-term growth in this segment, which is led by the ongoing private as well as government-backed infrastructure projects. There are also emerging opportunities in the data centers and telecoms, in electric vehicles and in the exports market. The company is confident of delivering industry-leading growth with a focus on deepening its distribution reach, which currently is at approximately 2 lakh retail outlets. It's also focusing on the backward integration, which will help in strengthening its supply chain, and is scaling up both the wires and cables as well as the fast-moving electric goods through the introduction of new products. Back to you.
All right, Vaishta, thank you so much for joining us. That's Polycab, and KI Industries is the other one, which is also doing well in trade today. Time for a break. Sachidanand Uttekar of Trade Bulls will join in with some trading strategies on the other side. Stay tuned.
Welcome back. Looking good for the markets. So it's that time of the day where we get you a midday update on what's taking place in the F&O things, or the F&O scheme of things. First half of trade has been strong. You have the Nifty Bank doing well. The Nifty Bank is actually leading the gains, and at the same time is the mid-cap index, which is mildly underperforming but gaining in step with all the other indices as well. About 1/3% higher as against the frontline indices, which are higher by 1/4 or 1/5%. Important to watch out for the Nifty financials, because out there the open interest is higher and we have the premium higher as well, and that is important primarily because it is FinNifty options expiry today. The Nifty financials options expiry today means that you have to focus on a few stocks in the last hour of trade. What are those stocks? You focus on HDFC Bank, HDFC and ICICI Bank. Together they have over 60% weight in this index, and other significant weights are Bajaj Finance and Bajaj Finserv. Usually on Tuesdays in the second half of trade, we do see some action on these counters as well. For the Nifty itself, now that we've crossed and comfortably stayed above that 18,500 mark, that's given a fair amount of ammunition to the 18,500 put writers. We've seen almost 50 lakh puts being written on that, so that means the support has moved higher from 18,350 to around 18,450. The 18,600 put too has seen a fair amount of writing as the Nifty holds higher. So the 18,600 put for a premium of 100 odd rupees, 80 odd rupees, means that 18,500 would be an important support as well. So what's the support zone? 18,450 to 18,500, which has moved higher by about 100 points since the time we entered trade today. In terms of open interest on the call side, 18,500 call writers are now covering their positions as they're feeling the heat as the Nifty is holding above. So you have around 6 lakh shares covered. If the market holds around these levels for a more sustained period, all the other 57 lakh people who have written those calls will also have to run for cover. That would mean the market moves higher. How much higher can it move? 18,600 call writers are sitting there with a premium of almost 80 odd rupees. So 18,650 to 18,680 is where we may see some bit of congestion. So to simplify it, 18,450 is an important support, 18,650 an important resistance to watch out for.
Okay, so that's the F&O setup, and we'll take this conversation forward and speak to Sachidanand Uttekar of Trade Bulls, who's joining us now to get that technical check on the markets as well. Sachidanand, what are the markets suggesting, the charts that is, important levels to watch now?
Well, good afternoon, and I would like to add a few pointers to Mangalam's data. So last week, we saw Nifty slipping below the 5-day exponential moving average for the first time. It breached the 18,660 mark, and post that we saw a sharp decline towards 18,370 kind of a zone. But on a closing basis, it did sustain about the 20-day exponential moving average. And right now, again, we are seeing that same phenomena. So immediate, I think the hurdle for the indices is placed somewhere close to 18,660. So probably we may see this, a move wherein the Nifty has been inching higher may continue, and still some longs can be added. The stop loss for the trade should be placed at around 18,540 from here on. When it comes to Bank Nifty, the hurdle is at around 44,000, and unless we don't see a breakout sustaining above that, we may not see fresh momentum play when it comes to Nifty Bank. So probably Nifty Bank may oscillate within this particular range of 43,800 on the lower side to 44,000. When it comes to Nifty, I think the trend is much more evident, and if you look at the momentum, that momentum play may only emerge once the breakout at 18,660 is established.
All right, we take that point. Just before we talk about stocks, just pull up the intraday chart of Dr. Lal Pathlabs, because there was news at the bottom of your screen just a while ago that the Delhi government will provide 450 types of medical tests free of cost from Jan 1, and these tests will be provided at their own hospitals and healthcare centers. And that has had a negative impact, a sharply negative impact on Dr. Lal Pathlabs, and that's primarily because of all the other listed diagnostic companies. Dr. Lal Pathlabs has its highest exposure to the NCR, and as a result of which that stock is lower. Though even Thyrocare is currently at the low point of trade. The sharpest fall, however, has been reserved for Dr. Lal Pathlabs. From 1st January, we will have 450 types of medical tests free of cost from Jan 1. Pull up the intraday chart of Metropolis Health as well. That wouldn't have fallen as much too, but still is meandering around the lows of today's trading session. The steepest fall is reserved for Dr. Lal. So that's about individual stocks. Any chartical view on Dr. Lal Pathlabs, Sachi, now that we have you with us, and other individual stocks that you have?
Mangalam, the trend has always been sideways for the last 4 months when it comes to Dr. Lal Path. But if you look at the weekly chart, here we are seeing a fresh breakdown getting established, and there's a falling three candlestick formation. Now, this is a very rare continuation pattern candlestick formation. So we don't expect an immediate uptick in this particular counter, and probably the resistance which was placed at around 2600 may shift lower towards 2440. So right now, I think the trend from a sideways zone could shape up into a bearish trend. So definitely, if someone is holding on to this particular counter, it's better to look for better levels on the lower side. We may see this particular decline getting extended to 2100. So right now, I think the trade setup is purely on the short side. 2440 could be the stop loss, and 2100 would be a good review zone from a positional basis. Now, when we look at some of the stock opportunities, we continue, with our long-short combination, since the Nifty is still trending below its 5-day exponential moving average. So we have a buy call on Bharat Forge. It has breached above its 52-week high. If you look at the weekly structure, we have a bullish pennant formation exhibiting a breakout. So we expect this particular momentum to extend towards 920. So fresh longs should be added in Bharat Forge with a stop loss at 882. And on the short side, we are looking at some distribution signs when it comes to Amar Raja batteries. If you look at the weekly scale, we saw a doji formation getting exhibited last week. It is near the 200-week exponential moving average, exhibiting a resistance at 670. We are expecting this particular decline to continue towards 640 eventually. So fresh short positions can be added in Amar Raja batteries with a stop loss at 672.
Okay, Sachidanand, thanks a lot for joining us, taking us through your technical picks. Let's slip into a short break. We'll get you an exclusive conversation with Fertilizer Secretary Arun Singhal on the government's fertilizer subsidy expenditure and a lot more. Stay tuned. Welcome back. The fertilizer subsidy bill is expected to be over 2 lakh crore rupees for FY23. The fertilizer subsidy stood at 1.62 lakh crore rupees in the previous financial year. Prashant Nair caught up with Fertilizer Secretary Arun Singhal and began by asking about the government's roadmap to fertilizer subsidy and a lot more. Listen in.
I agree with you. Because of geopolitical considerations in the world and various factors, the subsidy amount has gone up, and it's always a challenge for the government to find funds. But it's a question of priorities. If farmers occupy the highest priority for the government, then the government will ensure that funds are made available. And that has been happening so far. Even though prices have gone up internationally, the government has chosen to increase the subsidy burden and not to burden farmers. So, as I said, the government is fully committed to ensure that sufficient, adequate supply of fertilizer is available to farmers, and it is available at reasonable rates. That commitment is there, and therefore that will translate into action on the funds front also. So I don't foresee any problems. We struggle all the time to reduce the subsidy burden. We try various things like improving the gas supply, the prices at which we purchase gas, or diversifying our sources of supply of fertilizers. So we keep on doing that. We keep on trying to reduce the subsidy burden. But whatever it takes will be provided by the government, because the government is fully committed that farmers should get fertilizer at reasonable rates.
Right, right. For this year, FY23, I mean, what is the, are there going to be any changes now from now up till the end of the year for the full year in change in assessment in terms of the total subsidy this year, fertilizer subsidy?
Supplementary demands have already been placed before the parliament. You are aware of that. But
yeah,
as I said, if there is a further requirement funds, we will be going to Finance Ministry, and we have been assured that whatever is required would be provided. It's very difficult to give a number right now because the prices of gas will fluctuate. We don't know what the prices are going to be in January, February and March. And urea, as you know, largely depends on the prices of gas. So we don't really know how much the subsidy burden is going to be. Similarly, the prices of potash and the prices of phosphatic fertilizers also keep on changing. So it's difficult to put a number to it. But as I said, whatever it takes, we'll provide that.
Got that, sir. For FY24, the expectation is that, I mean, the number should be meaningfully lower. Is that something we can go with? Any thoughts or any ballpark numbers you can give us? What is your sense? I know it's a volatile industry.
So. The subsidy burden is very high. Yes, that is true. We certainly hope so. The subsidy burden is already quite high. As I said, we are working on several methods to reduce the subsidy burden. Several reforms are being talked about. But even if you leave aside all that, the prices of DAP have started cooling down. They had gone up to $920 per ton. Now they have come down to $720, $730. Similarly, the prices of urea have come down in the international market. Now we are getting in our tenders, we are getting a rate of $578 per ton. This rate also had gone up to $1,000 per ton. So prices are coming down, and that applies to phosphoric acid, rock phosphate, everything. So we do hope next year there will be a lesser subsidy burden. And the other important thing, of course, is that we have nano urea now, which is part of the supply chain. So next year the manufacturing capacity of nano urea will go up. We plan to make about 17 crore bottles of nano urea, which are equivalent to roughly 75 lakh metric tons of urea. So that also would contribute to reducing the subsidy burden. We are hopeful for a substantial reduction. Yes.
No, I got that. And that is what I want to come to, which is this entire nano fertilizer, right? It's already been rolled out for urea. Can you just explain for our viewers, what is, how does this work? How is this different? The conversion from, bags to bottles. And, markets are also looking at this very keenly because the amount of subsidy you need to pay on these will come down quite a bit, right? Go on, sir.
That's right. That's right. You see, when you sprinkle fertilizer in a field, there's a lot of wastage. First of all, lots of it gets evaporated and doesn't go to the plant at all. Whatever goes to the plant also is only part of it is absorbed by the plant and part of it is wasted. So the efficiency of using a fertilizer in the conventional manner is very, very low. On the other hand, when you convert that into a nano fertilizer, whereby the surface area goes up many, many times, and this is used as a foliar spray on leaves of the plant, then it is absorbed directly by the plant from the leaves. So the efficiency of using nitrogen goes up many, many fold. So roughly, I mean, in very broad terms, I'm not being very technically scientific here, one bag of urea would translate into 100 bottles of nano urea. and each bottle of nano urea would be as effective as a bag of urea. So you can imagine the efficiency goes up about 100 times. Now if that happens, what is estimated by scientists is that about 2/3 of the entire consumption of urea can be replaced by nano urea. We are talking of 350 lakh metric tons of urea being consumed in the country today. So if out of that 200 lakh metric tons can be replaced by nano urea, for which we don't really need to provide any subsidy at all, obviously there's going to be a significant saving in terms of taxpayers' funds which are being used. And secondly, from the environmental point of view, it's very, very beneficial. You can imagine we have to manufacture 100 times less urea, so therefore the environmental impact would be much lower. And the problem of leaching and contamination of groundwater and degradation of soil also would be helped to a large extent. So it's a wonderful strategy to go forward. And I'm glad to tell you that on the same lines now Nano DAP also has been developed by IFCO and by Coromandel. Two companies have developed it. They have applied to the Agriculture Department for registration.
By the way, are you close to giving an approval for this Nano DAP?
Yes, we are expecting it. As I said, by the next Kharif season, we should have it. It's been evaluated by a committee of experts in the Agriculture Ministry, and they are by and large satisfied. Field trials had been carried out earlier, so it's close to being approved now. Once it is approved, it will be out in the market.
Now, let's come to till then the input side of things. Prices of potash, ammonia, phosphoric acid, etc., have been very volatile. In terms of securing sourcing for these commodities, because we've seen a fair bit of geopolitical turmoil as well, what is the government strategy going to look like?
Our strategy is based on diversifying our sources and going for long-term MOUs with countries or companies. These MOUs are signed between companies of our country and their country, but we do facilitate them. So if we were to look at potash, for instance, the yearly requirement is 40 lakh metric tons. Against that, we have an agreement, long-term MOU, of 15 lakh metric tons with Canada now, Canpotex, about 7 lakh metric tons with Israel, 2.75 lakh metric tons with Jordan, 1.05 lakh metric tons with Germany. Now we have signed 7 lakh metric tons with Russia. If you add all this, it comes to about 35 lakh metric tons. So against a requirement of 40 lakh metric tons, we already have long-term MOUs for 35 lakh metric tons, and then of course we go in the market and purchase wherever it is available. Similarly, if you look at DAP or NPK or rock phosphate, phosphoric acid, we do have long-term contracts with many countries. So we diversify our sources and go for long-term MOUs, which give us a lot of comfort. They give a lot of comfort to the supplying company also because demand is assured. That is the strategy we are following. It is working well so far.
The other is gas supplies. I mean, the government has prioritized the fertilizer sector as one of the priority areas for gas. Is that, are there issues there there were some issues with availability, other sectors, of course, falling short of their requirements. Any thoughts you can offer here?
Yes, of course, gas is extremely critical for the fertilizer sector. If you look at the price of urea, 85 to 90% of the total price of urea is the price of gas only. So it entirely depends on the price of gas. And there's been a lot of volatility in the prices of gas also. Some of the long-term gas which was coming from Gazprom and sources in Russia has stopped coming because of this conflict which is going on. So gas prices and gas availability has been impacted. So we normally use three types of gas. One is called domestic gas, which is produced within the country. That normally is the cheapest gas. Then we have long-term contracts for supply of gas. They are the next higher in terms of cost. And finally, there's spot RLNG, which is normally the highest in cost. It varies quite a lot from $2 to $67. It keeps on varying. There's a lot of volatility in that. But normally, today it is coming at a higher price than even the long-term contracts. So the share of spot RLNG has gone up in our portfolio because long-term supply of gas has been impacted. So spot gas has gone up in our portfolio to about 25-26%. And that is an area in which we need to make savings. So we are working very hard on this.
All right, so those were some important lines coming in from the Fertilizer Secretary, talking about them not looking at any sort of subsidy on nano DAP. FY23 subsidy is quite high, but questions of priority is something that they will have answers to. So we will keep an eye out on snippets of these conversations playing to you through the day. But take a short break. On the other side, we discuss commodities. Manisha Gupta joins in with Colin Shah, who's the MD of Kama Jewelry.
Welcome back, and we are now joined by Colin Shah, live on the show. Colin, hi, good to have you. You know, jewelry sector and gold and silver prices is something that the markets have been talking about. As the prices rise, the demand for jewelry seems to be now consolidating, even tapering down. How have you seen the trends?
The trends so far, Manisha, very positive in the US.
Okay.
We were, as an industry, worried because after summer we saw a reasonable softening up, I would say, of the demand on the American side. But the last few weeks has been very positive, and going into Christmas, it does look like the numbers will be close to last year. You know, we don't expect a very high growth, but they'll be close to last year. The one interesting trend which has come out is that it always used to be the generation between 45 and 55, which used to be the largest consumers of diamond jewelry in the US or even globally. But, you know, the trend this year so far has been that Gen Z is spending 4 times the money that they did in 2018 and 19 on gems and jewelry. So that's a very interesting, healthy trend for our sector. And going forward, we see that you know, which will help propel the industry forward.
All right, so Gen Z coming into the folds as well. But, you know, I was looking at the numbers, Colin, and whether it's about gems and jewelry exports, that number, the overall number, or you look at the gold-studded number, even the lab-grown diamond number has seen a big gain for the month of November and between April to November as well.
Yeah, on the lab-grown side, you're saying, right?
Yes.
Yeah, so lab-grown, we've seen a tremendous growth of nearly 50%. And, you know, we do expect as an industry also that over the next 3 to 5 years, it should climb up to becoming 10% of our overall, you know, export basket. Of course, natural diamonds will continue to be the leader, and India will only consolidate its, you know, I guess, position on that front. But lab-grown, if with the correct policy support from the government, we've had several meetings as an industry also with them. We really do expect that India can be market leaders in this industry, right from growing to cutting and polishing to manufacturing jewelry to ultimately retailing in every market across the world. So that's what we...
Well, yes. Colin, I was also going through your wish list for the budget this time around, and the lab-grown diamonds as an industry features theirs as well. But what are the other levels or the points that you're looking for from this budget?
Thanks, Manisha. So from this budget, the good thing going into a budget always is that the government has robust tax collections, you know, on the direct and indirect side. So we are hoping that, considering our industry is not looking for any incentives as such, it's more things on the ease of doing business. The government will help us with whatever we've asked for. So the first thing that we've asked for is you know, abolition of duty on the seeds which are used for lab-grown diamonds. Now, this will really help, especially because there's a very high-tech, you know, which is required to manufacture this seed, and it's not available in India right now. This will really help the lab-grown industry to go to the next level. Secondly, we really believe that we have the potential as India to being the repair capital of the world. You know, we have millions of craftsmen who can manufacture any kinds of jewelry. But right now, our policy is such that we can only repair jewelry which we have exported, you know, out of India. While we really feel that there is huge potential that even if a piece of jewelry is being manufactured, say in France, Italy, Germany, anywhere in the world, if this could be imported into India for repairing, it would help the Indian manufacturer to connect with many more consumers and get access to global tech. So we're really hoping that we have a repair policy to be the global repair capital. We have these special notified zones, which was started 4 or 5 years back, and where rough diamonds come in from miners across the world for viewing in Mumbai and Surat. But they're not able to sell over here. These roughs have to go back because we don't have a presumptive taxation. So if that is done, you know, it'll be great for India because, you know, we'll make revenue which we weren't making earlier.
All right.
And technically our manufacturer will have access. He doesn't have to travel to Botswana, Russia, Angola, you know, different parts of the world to buy his rough diamonds. He can do everything in Mumbai, Surat. So that we really hope is done. And then last but not the least is the diamond impress license. So we used to have this license, but then this license was abolished when the diamond duty was 0%. But then once it went up from 2.5, 5, 7.5 back to 5, what has really happened is there is huge beneficiation happening across the world.
Okay.
You know, in Russia and in Botswana especially, there is pressure on our diamond manufacturers to set up factories there and cut and polish in those countries. Now, with beneficiation being a reality, we are hoping that this impress license is reintroduced so that the industry, which our government has so nicely nurtured, I would say, over the last 40, 50 years, continues to stay global leaders. If they're able to import 5% of their last 3 years turnover as duty-free cut and polish diamonds.
All right.
This will help our industry to survive and thrive in India.
All right. So that's the list for the budget, the wish list that is coming in from Colin Shaw of Kama Jewellers. So clearly hoping that the finance minister takes a look at that as well. But as always, thank you so much, Colin, for joining us to talk about the trends and the budget wish list as well. With that, we'll go for a break, coming back with Business Lunch on the other side.